happy Monday. How you doing out there? Can never see quite where I'm talking to. It's a little bit bright right in front of me there. Hope you're having a great start to the week there. This is our quick stock market update show. We call it the closing beat because we go over the stock market, and our name is Jazz Wealth. So it's kind of like mixing music with, you get it. So anyways, we'll cover the stock market here today. Of course, we're also playing a game. It's called Guess the Dow. You know the drill. Go to the website jazzwealth.com/guess the Dow. We'll just ask you your name, if you're a customer or not, and what's your guess, right? And if you are closest without going over it, then we'll contact you for your information to send you a $100 gift card if you're not one of our customers. And if you are one of our customers, we'll credit your account $100 if you would like, or you could take the gift card. There's no strings attached. You actually don't even really provide any information. Just take your guess, give us your first and last name. We don't market to you in any way. I hope you play along. Our customer last week, Starling, was the winner. Got $100 credited to his account. Also, we do weekly classes for customers. This week's class will be on the backdoor Roth IRA, how that works. So if you're one of our customers, you just go right on into the dojo. This is the dojo here, and we'll just pop up live right up in here. Last week's class was on the Secure Act and all the geeky stuff going on in there. But if you're new to the old Jazz Wealth here, you just go through and look and see different topics you may be interested. There are tons of them. I mean, by this point, there are just so many classes adding up in here. But our class this week will be on the backdoor Roth IRA. Also, there'll be no closing beat on on Monday of next week, as well as Friday of next week. But I will be in at University of Florida on Friday if you want to stop by and say hi. Mention that a couple more times if you happen to be in that area. But there'll be no closing beat because I'll be up there. Anyways, let's get started. The Dow was higher by 82 points on the day. Awesome. Well, if you're a bull, awesome, right? You got the S&P higher by 22, looking good. The NASDAQ higher by 95, continuing its massive, massive push higher. Let's go on over and take a look here because the S&P 500 sitting at all-time record highs. You got people excited about earnings season. Did you know earnings season starts tomorrow, unofficially, but it starts tomorrow with JP Morgan, Citigroup, Wells Fargo, the big banks coming out there, BlackRock also. And so everybody pretty much excited about that. The Iran news basically gone. I don't think I saw the word Iran one time today on CNBC or Bloomberg, just everything just whoop, we're moving on, no big deal there. You got Vice Premier Lou. He's in town here to sign the trade deal. So you got trade optimism going on there. We also announced that we're going to get together with them semi-annually to talk about trade, so we never have this blow up again. Well, that's how they say it. And the U.S. Sort of recognized the visit to the U.S. by the Vice Premier by lifting the currency manipulator tag on China. So that one sort of snuck by in the news today, but they got done with that. So that's good news. Trade news, Iran news is good. Earnings news is apparently good. Everybody's excited about it. You also got the Fed. They're out there talking about how they're happy with rates right here. They're not going to change the rates. They're not going to raise them on you for the moment. So everybody's excited about that. Oil's cheap again, right? We go back over to the price of oil. Hey, that keeps falling back down to the 200-day moving average. People excited about that. Less lower priced oil means lower priced gas, which means you have more money to go spend. And so because of that, stock market's just feeling good to start a Monday. You got the S&P sitting at all-time highs there. You got the NASDAQ doing the same. That's leading the way. That's your best performing index so far of the year. And you got the Dow. Not quite there. Didn't quite get to highs today. But all in all, everything looking pretty good there. You've got earnings coming up. I mentioned that a second ago. Here's where we stand. This gets to be a busy time here for us in the sort of stats we give you. Earnings for the last 8 quarters in a row, analysts had been lowering the bar on more stocks than they'd been raising the bar on others. So what we look at in earnings season is all of the stocks together. You look at all the analysts and you see how many of them are lowering the bar on, I don't know, Chipotle, for example, versus raising the bar on, say, Netflix. And you put them all together and you go, are they lowering expectations, meaning they're expecting less out of these companies, or are they raising and they're really feeling good about what they have to achieve? The bottom line is for the last 8 quarters, they have been lowering the bar on more stocks than they raised the bar on others. So in other words, what that means is they made it easier for the companies to beat, and thus we get excited and we go buy the stock. This quarter, which will be the 8th quarter, is also, they're lowering the bar more so on those that they're raising. However, this is the lowest amount of stocks that they're lowering the bar on. So analysts have basically said, you know what, we're done lowering the bar. We think you guys are going to beat all these earnings. So they've basically made it tougher this earnings season for stocks to really stand out with any earnings beats. This is the least negative they've been in the last 5 quarters. So you got a bit of excitement coming up here for earnings season, which will officially start tomorrow. We'll talk a little bit more about that. of course, tomorrow. Now, you look at the stock market where it's sitting at these all-time highs, and I mentioned this on Friday. There's really only a handful of stocks that are moving the markets higher, right? And I tried to illustrate a chart to you. I couldn't get it over to you. Well, I got it today, and we're going to press this button, and voila, it worked. Awesome. So what we did is put together a chart of all the sectors in the market and the S&P 500, which is in black over here. This is S&P. As of today's close, S&P up 1.88%. So that's the index. If you had to look at a chart here and say, well, which sectors do you think are pulling the index higher? It's not materials. It's not retail. It's not energy. It's not consumer staples. Not utilities. It's not really financials. It's a very, very insignificant amount in REITs. It's a very, very insignificant amount in consumer discretionary relative to their weighting in the S&P. Look over here. It's basically tech. Tech is made up of basically Apple and Microsoft anyways. You got communication services, which is basically made up of Facebook, Google, and Netflix. These sectors are driving the markets higher. In our Notes to Jazz email this week, I sort of had fun poking at an analogy about people out fishing and drinking beer. The analogy was, if there were 11 of us and we were all fishing, right? We were catching fish. It's doing great, right? And 10 of us stopped to go grab a beer, and we're sitting down there, we're just having a good time telling camp stories. The biggest guy who came with us is still fishing. What happens when the biggest guy turns around and says, hey, I want a beer, I'm going to stop fishing for a little bit, right? You don't want that, right? You want everybody to contribute. So we all want to be on the same page, and right now when you look at this breakdown of the sectors here, tech, communication services, they are basically pulling this market higher. Industrials don't have as much of a weighting as these two, so that's why I haven't talked about them. But when these two areas start to take a break, I'm not saying the markets fall, right? I'm just saying if they just stop and they just don't contribute anymore, you've got a market that goes stagnant. If they decide in this sector here that people go, hey, I want to rotate some money. I'm going to take some profits out of tech and I want to put them over in retail for some reason, or in materials, or go bet on the financials because they're undervalued or fairly valued at the moment. If that happens, all of a sudden you have a stock market you think would continue higher, but it wouldn't be able to do that because you need tech and you need financials to move higher. You can't have one or the other. So kind of an interesting thing. And in our Notes from Jazz email that went out this weekend, we also broke down the S&P sectors so you could understand, all right, well, what if everybody decided to start buying industrial stocks? How much of an impact would that happen? What if they all decided to buy energy? It really wouldn't move the markets as much as you think it would. So anyways, that's what I wanted to share with you. There's some notes below if you want to read through some of the sort of the fundamentals of the different stocks there. And remember, tech, right here, 4.26, makes up about 25% of this guy here, the S&P 500. So 1/4 of the S&P 500 is doing all the work at the moment. So anyways, that's where we're at there. Let's go through our update here. Let's go through all the different sectors, break this down for you if you guys want to play along. Let's do it. You got tech. By the way, tech is the best performer during earnings season there. It averages a 2.2% gain, which says a lot considering how far it's moved. The tech sector, since the start of this bull market, go all the way back to 2009, the tech sector averages a gain of 2.2% during earnings season, which we're about to get back into, and it's positive 72% of the time. So that's kind of your geeky stat, one of your geeky stats there for the day. If you look at tech today, just today's measurement there, 8 of the top 10 holdings in this ETF, the XLK, were up over 1%. So it's not that they were just higher, they were up over 1% on the day. NVIDIA is going to go down as one of the best, if not the best today, up about 3%. It was an upgraded at Needham, I believe, upgraded the stock. They said their gaming business is picking up, and so NVIDIA had a great day today. Salesforce.com up over 2% as well. Incredible. Just an incredible move on that one. The fact that it's so extended and people are chasing it, you wonder why? People are going for the leaders. They're not going and picking out their latest discount stock. They're going and just picking the leaders. That's the easy path at the moment. So in the tech space, that's some of your good performers today, and tech made new highs. Retail bouncing off the 50-day moving average, looking pretty good considering if you look at Rite Aid, that's still falling. Yeah, they had earnings. It was a great move higher, and almost every day it's pulled back a little bit more. You could see the pattern is kind of slowing down a little bit there, but still down 3% on the day. That's impressive, right? Foot Locker goes down as the relative weak play inside of retail. It was down on the day, just didn't really participate. It was one of the weaker names in the group as well. Let's move on over to REITs. finally. REITs moving off the 200-day moving average. We talked about it chopping around here. I mentioned it like every other day. The fact that it was just hovering right around the 200-day, not really getting anything done today. It was really strong coming off of that. If you dig through and you kind of look through some of the REITs there, American Tower, which is a cell leasing REIT, they were up 2% flat on the day, just a perfect 2% on the day, looking pretty good. The second largest in there is Prologis. These are industrial. This is an industrial REIT. These aren't like apartment buildings or anything, but they did great. 2.6% gain on the day, very much helping the REIT space move up and off the 200-day moving average in a more convincing way. So if you happen to watch this stock or this sector or this ETF, and you're like, I don't know, I don't want to dive in when nothing's happening. Today, you sort of got the all clear where the bulls were happy to just dive back in there. Basic materials, back over the 50-day moving average there. Not bad. It was pretty much a broad sector rally there. You had Freeport moving higher, broke to new highs just after a real sloppy sort of sideways trend there. Is your best performer in the group. JP Morgan gave it a price upgrade to 15. 15's off the chart here, so you can't really see it, but 5% gain on that JP Morgan upgrade there. Their original price target was down here at $12. So they had to increase it. They guessed it right. They did good. So new target on that one. Found it interesting that about the time you see Bernie Sanders is leading in the polls, beating Elizabeth Warren, and starting to creep up there against everybody else, and beating everybody else. You've got healthcare a little bit weaker, so that might be the start of the end of this rally. Remember when Elizabeth Warren started dropping in the polls? That's what kicked off this whole rally. It's almost perfectly timed there. If you look through a little bit, the insurers are what took the weakness on the day. Humana down about 2%. United Healthcare was the one I looked at earlier. It's down 3% on the day. There's really no new news. There's a JP Morgan healthcare conference going on, but I think it's just starting, so there's no real exciting news out of it just yet. There will be, but UNH a little bit lower on the day. The insurers there taking a bit of a hit there. But really a Bernie Sanders hit. That's essentially a Bernie Sanders hit to that sector right there. All right, looking at some individual stocks. Tesla, can you believe it? Added almost 10% on the day. Oppenheimer came out and said, yep, $612 price target. It makes it feel like, they're really factoring in every penny there. It's like when you sell a car and you're like, I want $10,942. People are like, oh man, he knows his value, right? So they guessed they put a $612 price target. You know where their previous price target was? All the way down here. $385. So they did well. I mean, it's another one where they had to raise it. The $612 price target is officially the highest of all analysts out there. And basically they said, did I mention it was Oppenheimer? So Oppenheimer said that Tesla's technology and what they're doing is 3 years ahead of all their competition. So that's a pretty good compliment, or a pretty good analysis, if you're going to say it that way. 3 years ahead of competition, no matter who wants to try to compete against them. General Electric moved higher about 4% on the day. Deutsche Bank says that their fourth quarter earnings, which comes out January 30th, before the market opens, I believe, will beat expectations, and they also think that they're going to guide for 2020 higher. So that stock was higher by 4%. That's pretty bold. You got a lot of bold comments coming out of analysts just trying to get some attention out there. I like that one. We'll try to follow up with it. Beyond Meat's added another 20%. My gosh, it was up 20-something% last week, 25, 26%. So great pop for that one today. It sort of started that last week, as we said. McDonald's says they're going to go expand their test. One of you guys nailed that. I saw that comment where he said if they would just expand it with their McDonald's test. Well, they did. They expanded it to 52 stores. So impressive move for Beyond Meats, and much deserved for those of you that were patient enough to participate in that stock. It wasn't looking good for a while. Speaking of not looking good, although it did finish well off of its lows, Five Below. This is that store where you go in and almost everything's $5, but they try to tell you that there's other stuff that's cheaper. That stock was down 20% to start the day. They guided lower for the fourth quarter. Apparently they didn't have too good of a holiday season there. They are now, they're guiding lower for earnings and revenue, but the real issue, I think if you look into this, the real issue is that they lowered their revenue expectations by just about $50 million in one quarter. This is a mid-cap stock. This is not like, a well-known big cap stock. It's a mid-cap stock. So to lower their estimates by about $50 million on the high end, that's not good. So not a good sign there for them. Yeah, had some bottom pickers in there as well. So that's it for that one. What else do we have? Apple. So if you read Barron's does a whole weekend thing. Barron's says that if you are investing in Apple, you may want to consider a hedge against your position. Basically, they're telling you it went too far, too fast. Consider taking some profits or hedging against those profits, which in my opinion, hedging is rather cheap right now if you want to do that, but it usually is just better to take the profits. You're at the early beginning of the year. You don't have to worry about any taxable gains like next month having to pay taxes or anything. Why pay for a hedge if you don't have to, unless you're going to set up some kind of pairs trade or something? I don't know. But anyways, Barron said you should consider a hedge there. That was in the article. Also, Ford missed their delivery guidelines, delivery estimates, down 14% year over year. China delivery estimates there. Anyways, you got 74.6% of the S&P 500 above the 50-day moving average. We were at almost 72 the other day, so a slight uptick there. You've got now 58 names within 2% of hitting getting above the 50-day moving average. We were at like 65 or something the other day, so a slight improvement there. You got 60 names making 52-week highs. That's impressive. It's a good start to the week there. 60 new 52-week highs. You're going to have the semiconductors in there. Tech stocks, Skyworks up almost 4%, hitting new highs in the meantime. We mentioned NVIDIA already. You may have noticed that hit new 52-week highs. BlackRock also hit new 52-week highs. Remember, they've got earnings, I believe it's Wednesday, and remember Deutsche Bank said that BlackRock will outperform the S&P through earnings season. So we said we'll keep track of that just to see. So far it is outperforming the S&P, but they have earnings coming up, so we'll see what happens there. That one caught my attention. Apple, in addition to Barron's and everything, there was it D.A. Davidson? I believe it was D.A. Davidson put their price target to 375 from 300. Yeah, so they went from $300 price target to $375. Obviously, good news for them. The other names still in the news here. This Facebook still going here. What's new? Google. What else is new? I keep saying that, right? Just moving to new 52-week highs. Seagate Technologies moved to new highs. A little bit of a breakout there. It's kind of sloppy, but that's what we're seeing these days. If you're seeing breakouts in the middle of an uptrend or at the top end of an uptrend, they're kind of sloppy, and you just kind of have to accept it. Breakout traders don't really like that. They like a tighter trend. But this is what you get with stocks that are sitting at highs. Just a little bit more volatility than you like if you're a technical trader. Hormel, by the way, hit 52-week highs there. That breaking out not only out of a little short downtrend there, but really strong. Hormel looking good. They were in the news. Did they partner with somebody? No, that's not them. That was somebody else. Anyways, Hormel looking really good there. There was only two 52-week lows. Delphi. Yeah, a little bit of a waterfall drop there on Delphi, and Macerich, again, just continuing to get beaten up there. Okay, you've got earnings tomorrow. Citigroup, Delta, JP Morgan, Wells Fargo. Let's take a look at JP Morgan first here. So JP Morgan, for earnings, a little bit tough. 82% of the time it beats on earnings. 56% of the time they beat on revenue. Only 47% of the time is the day of earnings positive. So a little bit weakness there to the downside if you're interested. Wells Fargo's a little more interesting because this stock gets a little more volatile around earnings. Now you love it. If you're a bull, you love the fact that it pulled back into earnings there. They beat on earnings. Basically earnings and revenue, it's about half, right? They beat on earnings and revenue about half the time. Only 38% of the time is the day of earnings positive. I got a feeling tomorrow could be the day it finishes positive. We'll see. I just like how it sold off there. Last quarter, they missed on revenue. The stock gap down 1.69%. So you very rarely have these wild, crazy gaps in the stock. The day that it gapped down, the last fourth quarter, I can't go back that far, but it actually finished the day down about that much. I think it was down like 1.7% or something like that. The average gap, here's a kind of interesting stat. The average gap is next to nothing for Wells Fargo. They typically report earnings, and the average gap over, since 2001 at this point, is basically flat. Now, there are obviously times where it gaps well outside of the range. Here, last earnings, it gapped higher, of course. The average gap for just the fourth quarter, though, is quite positive. It's almost positive by 1%. So we're looking for a gap up tomorrow. We'll see what happens just for fun using the stats there. And that's Wells Fargo. All right, you got AbbVie paying out a dividend. Down a little bit today. AbbVie going ex-dividend today, paying out $1.18 if you're interested. Yeah, that comes out tomorrow. That's right. That's the right one. And Citi Holdings paying out 57 cents. And that's pretty much all. Oh, Abbott Labs? Let me just make sure. Abbott Labs is paying out 36 cents. Those are your dividends for tomorrow. Other than that, I think I nailed it. I'll take your questions if you have any, see what I can do in that respect, and we'll see what happens. How do you hedge Apple? You buy more Apple? Is that what you well, I wish you the best. That's a great performing stock. I mean, anybody that owns that stock, that's a good one. It's doing well. Tesla is a tough one. I'll be honest with you, if I was a guy that was able to tell you, like, I'm buying this stock now and I'm going to sell this stock now, I'd have completely missed it, right? There's no way I would have participated at those highs. I would be just licking my wounds at the moment, wishing I'd have been participating in, or would have participated in that. Visa is buying Plaid. So Corvo merged with Plaid, and now Visa is buying Plaid. That is huge in the fintech space. Those guys, by the way, what Plaid does, we tried to use them in the past. What they do is you link up your bank accounts. So if you ever go into Nest Egg and you link your bank account on the back end, that's a company like Plaid. We don't use them currently for that, but that's what happens there. So for the apps that do things like make a budget, bill pay type apps, a lot of them use Plaid, right? And so in the background, when you link an account, the way to tell is when you link an account, if it shows it shows the logos of like the top banks out there, that's Plaid. That's how you can tell it's Plaid. But anyways, $5.3 billion. Wow. Wow, wow, wow. Big acquisition for them. Yep. Could you do a closing beat one day where you talk about the international market? Love talking about the international market. Didn't think many people were interested in that. We certainly could. We could add more into that. Yeah. I love talking about that one. Our international fund here is kind of spread out at the moment. Alibaba was up on our list today. We happen to own that one. It's up 3%. But to focus more on that and the news, I could throw some of that in there. I just didn't think anybody cared. Chinese tech stocks still risky. Is there something in particular? Did I miss the one you were talking about there? What do you think of it? I don't look at the pot stocks much. I'd be honest with you. I don't believe in them. I think it's just an expensive way to trade the markets. But Aurora Cannabis did come up off its lows. I mean, it finished up 3% today. Are you saying like you feel like that's a little relatively weak compared to the others? I could see that. Yeah, I could see that. What percentage of the days has the market hit record highs since it's been open? That's an interesting one. I would be interested in knowing that plus how many days in between as well, because during downtrends and stuff, it could be many years before it makes a new high. That's a cool study. How in the world is this bull run lasting this long, and why are the commercial and retail still buying these overpriced tech sectors? You're the crazy one. Yeah, tech is officially the most expensive it has been in this entire bull market. If you were to break down the valuations into percentiles or deciles in this case and do 10, 20, 30, whatever, tech is officially in the 100 percentile. It's never been as more expensive than it is now. However, this is not technically the longest bull market in history. I covered this for customers. We could go well over 1,000 more days and still not be the longest bull market on record. So you got people probably looking at some of that as well. I mean, I agree. Great little move here, though. Without many bubbles, you know what I'm on? Not too many bubbles that you could point out. Maybe like auto loans, a little bubble-ish, but yeah. You think it's Aurora Cannabis is highly undervalued with two analysts stating $1 stock. Well, I mean, hey, that's what makes a market, right? You think it's an undervalued stock. You think it's a buy at this point, whereas other people think it's a sell. That's what makes a market. There's always got to be a seller for every buyer. Who knows? Maybe you pick the bottom on that thing for $1. Well, $1.70. Taking a shot. What type of account should you hold REITs and MLPs in for future tax considerations? Depends really on the dollar value. Like a lot of people get nitpicky about this and they're just getting started or something. It really doesn't matter. You're just getting started. As you build your account and the difference between taxable investments and post-tax investments starts to really build up, whether it's 401ks and things at work, that's when you really want to look at what do you have and then look at those REITs, MLPs, things like that to see, should you shift those investments, and can you, right? Can you move them into other accounts? We're not too far away, I believe, from where 401ks, they'll just drop the list of funds. They'll give you target date funds, but then they'll just say, yeah, build whatever portfolio you want out of stocks and stuff. That's what we really need in that respect. Not sure if I answered your question, but it's Monday. What are your thoughts on Smile Direct Club? So I had some fun with the missus. We saw a Peloton commercial or something, and she recognized they were public. I'd mentioned it at some point along the way, and she's like, "Wow, they must be making a lot of money because they advertise and everything." I'm like, "Actually, they lose money," and she couldn't believe the fact that there was companies that people would invest in that lost money on. So it's actually quite normal. And I went through all the IPOs last year. Smile Direct Club was one of them. They lose $114 million. I don't like looking at stocks that lose money unless there is a very, very clear path to profitability. Uber tried to say we are very clearly on a path to profitability and it hasn't panned out. That makes it difficult to be a long-term investor. As a trader, it looks like people are starting to pick the bottom on this thing, though. Especially the last couple of days, you see that volatility pick up. So as a trader is different than investing. It's hard to invest in something that doesn't make any money. You think markets could pull back when there's the signing? The actual signing, I think, is pretty much expected. I mean, he's here, right? Vice Premier Lou, he landed. He's already here in town, probably having a little dessert or something. So it's already going to happen. We already pretty much are here expecting this. I don't think there's any reason that the market would sell off on that alone. The market's also going to have a lot to digest with the econ data coming out, earnings coming out by Wednesday, of course, be a lot of things to focus on. So I think it'd be hard to just attribute a down day to that or expect a down day because of that. Now, a down day just because would be great. I think a lot of people want that. We're just not getting it. I think some of the details came out today of phase one there. I'm not sure, I don't have any update for you when they'll release it. I'll give Mr. Mnuchin a call and see if I can get him to release some of it to us. I love it. Ricardo bought some Smile Direct Club this morning. Not bad. It's a good day for that one. Nice. Roku, we haven't talked about that one in a while. Kind of faded out of favor there. Last one I'll talk about, you got Roku breaking through this uptrend, and because of that, look what happened. We talked about it breaking through and how you'd see extra volume, so that happens every time. There's stop losses going off here. The next rally couldn't get back above it, and so people give up. And now this stock is floating around in no man's land. It makes it difficult to get people to want to dive in a significant way. It also makes people that are holding, that didn't sell, not want to sell. They're like, well, nothing's happening. We're going back and forth a little bit. I can hang on. I can understand that. And so because of that, you very likely have a stock that just kind of floats around waiting for news or waiting for earnings would be probably more particular there. Earnings would probably be the next wave of increased volatility. And unfortunately, you got till February 5th after the market closes. So how's that one? Yep. No down days allowed. It's the new Fed mandate there. Plunger group out there in full force. Hey, I'll wrap it up there. I appreciate you guys stopping by today for a Monday. We'll be back tomorrow to do this all over again. Remember, no closing beat next Monday or Friday. If you're in Gainesville, I'll see you up there if you want to stop by and say hi. But otherwise, enjoy the rest of your day. We'll see you tomorrow. We'll do it all over again. Thank you so much for watching, subscribing, and hitting the thumbs up button. And have a great day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.